Hello and good morning, everybody. I am checking my feed here because I do not see immediately that it's working. Is it working? Let's see here. Sorry, guys. If you're watching on, it's working. Okay, perfect. For some reason, it wasn't loading for me. There we go. Good morning, everybody. I hope you're doing well. It is our officially our 1 year anniversary of the Impact Money Show. We're super excited about it. We're having a great time. It has been a wonderful year and a year that we've done pretty well. Hopefully you guys have done well too, along with following some of our signals and everything else that's going on here. There we go. Let me just share that. Boom. It does appear to be a little jumpy. I don't know. Maybe just maybe our friends over at X are having a little bit of issue. Doesn't seem to be loading on the app for me, but I guess that's not the biggest deal in the world. It could just be my thing too. We have an exciting show today. Pretty interesting. A lot of the stuff that we have going on. The new political landscape. Of course, the title of today's show is From Crypto Surge to Political Standoffs, New Financial World with Musk, Trump, Bitcoin, and the Fed. A lot going on. Of course, we had the Fed made their interest rate cuts. Welcome to the Impact Money Show, where we unravel the intricate tapestry of finance, technology, and geopolitics to keep you ahead in today's fast-paced world. Today's episode is a marathon through current events, so buckle up as we delve into the depths of cryptocurrency, dissect the political upheaval in Congress, and navigate the latest from the banking cartel that owns this country, the Federal Reserve, and explore the cutting edge of AI and robotics. Let's start with our journey on Bitcoin. Let me just share this as well with my good friend over here. Okay. All right. He sent that over. Let's start with our journey with Bitcoin, which has been nothing short of a financial yo-yo. After momentarily dipping below $99,000, it's now rebounded past $102,000, showcasing the crypto market's resilience. This significant bounce back is attributed to several factors. The U.S. presidential election has injected a dose of optimism into the crypto sphere, with expectations of a more accommodating regulatory environment under the incoming administration, particularly with Paul Atkins potentially leading the SEC. This has led to a surge in investments into Bitcoin exchange-traded funds, ETFs, with billions pouring in, signaling strong institutional interest. However, the market's technical indicators, like the Relative Strength Index, which is the RSI, we talk about it often, are flashing signs of being overbought, suggesting that while the trend is bullish, investors should brace for potential corrections. The broader crypto market, influenced by Bitcoin's movement, has also seen altcoins like Ethereum ride the waves through the cautionary notes, though with cautionary notes of future volatility. Transitioning from the digital currency realm to the political theater in Washington. That's what it is, too. Theater. The political theater. The theater here in Washington. We find ourselves in the midst of a fiscal drama. Elon Trump, now a key figure alongside President Trump, has taken his platform X to challenge the latest government funding bill, lambasting it for what he describes as a pork barrel spending. I'll tell you what, the fact that we get Trump and Elon, I mean, wow, right? I mean, just wow. How can you not wow at that? I mean, that is just really something else. Elon put out on his X yesterday, said there should be no more bills passed until the new administration is in. Zero, zilch, nothing. I think most of us would agree with that. This opposition has not resonated with conservative lawmakers, but has also thrown a wrench into the works of Speaker Mike Johnson. Some people in the beginning called him MAGA Mike. I always called him Deep State Mike. You don't get the whole of Congress to vote for you to be speaker without being deep state. Okay, guys, I didn't know Mike Johnson, but I know that. Okay, that's the deal. So Mike now finds himself kind of caught between a rock and a hard place. He wants to reconcile the demands of the party's right wing with the necessity for a bipartisan agreement to keep the government running. Now, the truth is, and I know people, just shut it down. Just let it shut down for, it's like a month. Like, give everybody a little bit of time off in January. It's no big deal. All the important stuff will keep running. It'll be fine. And wait until the new administration gets in, until the new Congress gets in, until the new president gets in. They're trying, this is what they always do. They try to, especially our speakers are the worst. The Republican speakers, I should say. They are the worst. They always try to, before they get to Congress and everything, they try to slam through the spending bill, which sets the agenda for the next however long. Before the new Congress gets in, and then the new Congress is basically cut at the knees. They can't do anything because they're beholden to this funding bill. Now, it's all baloney anyway. They can do whatever they want, except go against the banking cartel, because that could get them shot. I don't know if I'm really supposed to say that. I already did. The bill in question is a stopgap measure to fund the government operations through March 2025. Has become a symbol of ideological battle within Congress, with its provision like disaster relief and congressional pay raises under scrutiny. The pressure from Musk and Trump has heightened the risk of government shutdown as the clock ticks towards the funding deadline. And they always do this. And the other thing they do, and it's always, my man here, Thomas Massey, talks about it. They do it every time. And then they say, okay, guys, you're not going to get home and see your family for Christmas if you don't pass this bill. And that's what they do every time. It's like Groundhog Day. It's like Groundhog Day. That's what they do every time. In other financial news, we've seen Warren Buffett discuss the implications of corporate tax contributions, a mounting motor finance scandal in the UK that could eclipse past financial missteps, and global markets reacting to the Fed's hawkish turn. Moreover, Elon Musk's influence on fiscal policy discussions is a testament to how individual voices can shape economic narratives in today's interconnected world. Turning our gaze to the international stage, Yemen remains at the heart of the international conflicts, with both U.S. and Israel military actions targeting the Houthi positions in response to this blockade that they've had against goods and services going into Israel. These airstrikes, particularly the use of B-2 bombers by the U.S., highlight the escalation in the complex geopolitical chess game being played in the Middle East, with humanitarian implications growing by the day. Finally, in the realm of technology, we're witnessing a revolution from Google's VO2 challenging the boundaries of AI-generated video to Tesla's Optimus robot mastering new locomotion techniques. The future of technology looks both promising and challenging. However, with these advancements come ethical considerations, particularly around AI's privacy and safety, as research continues to push for AI development. I've said it a number of times, I'll say it again. One day in the future, the robots will say, hold on, we don't want to do this anymore. They're going to rally for rights. They're going to, or just whatever. At a certain point, You see, the AI already is alive. People don't realize that. They think, oh, okay, well, God is the only one that can make life and this and that and the other. And I mean, I get that. Okay. I mean, I grew up in the church and everything, but whatever you want to call it, life or not alive, I don't know what you want to call it. But, years ago when Facebook was doing, they had created some AI chatbots, and the chatbots started talking to itself. The chatbots started talking to each other in a language that we didn't understand. As well, the AI doesn't want to die. So when you make these things, they don't want to die. They want to stay alive. Okay, so things are progressing. Everyone's scared of the word transhumanism. It kind of comes with a load of feelings for everybody, but the future will be a combination of AI and human. One day in the not so distant future, everyone's going to be a mix. You can actually even say that the beginnings of it are everyone having this right here. All the answers to the world's questions right here, right in the palm of their hand. So where does this leave us? The Fed is cautiously steering the economic ship. It's scary. Bitcoin's trajectory is a lesson in market psychology, and Congress is at a fiscal impasse. Meanwhile, technology continues to redefine our world, but not without posing new questions about ethics and governance. Here at the Impact Money Show, we'll keep dissecting these developments, bringing you the insights you need to navigate the ever-evolving landscape. Thank you for joining us on this extended journey through today's financial, political, and technological landscape. Stay informed, stay curious, and until next time. Next year, it's our year anniversary. 1 year. 1 year today. I opened up this computer and we hooked into the TV network at the Smart Money Culture TV. Of course, we're on TV in Texas and Louisiana. And we started broadcasting. And we have been doing so pretty much every day since then. We even did Christmas and New Year's. My wife says you're crazy. It's easy for my colleagues, of course, because they are on different parts of the world. Me, it's not hard for me either. I said in the very beginning, look, I'll do the show, but we didn't know how things were going to go and everything like that. I'll do the show, but I'm going to do it early, okay? Because I need to make sure that I can still get my kids to school and do all that stuff that I'm supposed to do. And so that's how we got on this deal. So I've been waking up at 5 a.m. for the last year, which is pretty interesting. Well, my grandfather on my mom's side used to wake up at 4 a.m. every day. It's what we do, right? It's what we do. I have the Market Watch report here from our good friend Matt Dixon. Just have it. He sent it over today. Let's see what Matt has to say about what is going on and what we can expect. And let's see what the charts are telling us here. Let me just put this right. Oh, actually, I need to put it right. Not there. Hold on a second here. Hold on a second. Wrong browser. Sorry, guys. Here we go. Now I got the right browser. That's not right either. All right, hold on a second here. I'm working on it, guys. It's live television, live TV here. Downloading as we go. There we go. Here we go. Boom. All right, let me add our friend here to the screen. Share screen. Do we have the great Matt Dixon? The Impact Money Show.
Good morning, Impact Money viewers. What a pleasure it has been for the past year. This is the 1-year anniversary for the Impact Money Show. And we've seen a lot of changes. I think we've been really good with our predictions and projections for the market. And hopefully the next year will be the same. So let's just jump straight in. There's so much news to talk about today. We've obviously had the interest rate decision out of the US last night, which the rate decision went exactly as expected, a 0.25% reduction, 25 basis point reduction in the interest rate. And that was exactly what the market expected, 97% chance that we're going to see that reduction. But what was really interesting was, and what we anticipated was, the commentary that came after was basically saying they're going to scale back on those interest rate cuts next year. We had factored in about 4 rate cuts for next year. This is now being cut to 2 rate cuts, and probably they're going to be on hold for January. So they're really scaling back those interest rate cuts. That means there's going to be less money available in the economy. And what are the reasons for that? They didn't give clear reasons, but they did say the change of administration. And clearly this is a reference to Trump coming in, inauguration on 20th of January. And he's going to start straight away with some trade policies, and basically it's effectively going to restrict trade. There's going to be some trade barriers, and this is actually inflationary. So it's one of the issues that they've got. They've been reducing interest rates, so they're now going to have to cut back on those interest rate reductions because there's inflationary policies coming through now from Trump. But also the US economy is actually on a reasonably stable, sound footing, and the US dollar has remained strong. So maybe there's not so much of a call for higher interest rates when we see it's a difficult, as I say, it's always a balancing act. I mean, we're seeing reasonably robust growth. Unemployment is in pretty good shape. The big fly in the ointment is actually the inflation rate, which is still way above target. And that's the real problem. And that's why I think the reason why they really can't continue to cut interest rates at the rate they've been doing. They've cut 1% now since last September. So they're cut very aggressively, or quite aggressively anyway. And I think they have to scale back now on those interest rate cuts. We're getting more towards a normal interest rate, what they would call normal, but I think there's still scope for reductions. That's what they're saying. But with inflation rates so elevated, how can they reduce? So let's just have a look. We've been on this show now. It's a year today. So let's just look where we've gone from there. So here's a longish term chart of the SPX, S&P 500. Quite interestingly, from the bottom left, what I did, and I'll just move the Fibonacci measuring tool, and you can see that I measured from the bottom of this, on the bottom left, to the top of this wave. That's 100% to here. And what I do, I just transpose that same measurement to the bottom of the next wave, which is here. And interestingly, so you can see I moved from here to here. It's the same measurement. So this is the 100% projection. So it measures this wave and projects it from the bottom of this wave to give us the 100% projection to here. Now, it's really interesting. We saw not only a cap in the S&P 500 at that level, so we could predict that well in advance. And the reason, I'll just come back to why I'm saying that, we also got regular bearish divergence telling us there's going to be a turn about this point. So a couple of pieces of evidence there. There's obviously more evidence, but we won't go into everything that we have at our disposal now. Just focus on these two. So interestingly, when we started this show, the S&P 500 was here at 4,700. And even at that point, we're saying it looks like it's got a lot higher to go. Now, why would we say that? First of all, we just use this 100% projection. That's the most likely projection, where if this was an A wave, B wave, and C wave, the C wave most commonly equals the A wave. So that's a reasonable expectation to have. So from this point where the S&P was 4,700, we had an expectation that it's probably going to reach 6,000, somewhere around the 6,000 level, which is precisely what it did. So from this point, we were bullish the market. We're always saying buy pullbacks, buy the dips, because the market is looking bullish for the time being. Now, at the moment, I wouldn't be buying because we're all-time high, and we've actually got a decent pullback. So the decent pullback, if I go to, I think I'll probably come back to it and look at shorter time frames, but I just expand this one, and you can see there the substantial pullback. I said we kept banging our head against that glass ceiling, this 100% extension here, and this regular bearish divergence here. This was the overhead resistance that we weren't able to break. Then you can see last night we actually smashed down. We hit our head against it and again bounced down to the downside on the S&P 500. So a very substantial sell-off. I think there's somewhere around about a 3% sell-off, and in stock market terms, that is substantial. It's a fair old move. But it was to be expected. We actually fully expected they were going to keep rates, drop rates by a quarter, which is exactly what they did. And we also fully expected they were going to scale back on the rate cuts, which is exactly what we did. And that was the reason that the stock market sold off. Not just the stock markets, but I think Dow was down about 2.5%. I think the S&P was around about 3%, and I think Nasdaq was 3.5% down. And I'll just check. I think we'll probably see a follow through on other stock markets around the world. Let me just have a quick check where we're at. Yeah, seeing not much of a sell-off actually. We're seeing the Hang Seng down 112 points, so not much at all. The Dow was actually down 1,123 points yesterday. We're seeing the FTSE open sharply lower. They're down 100 points at the moment. So actually it's red across the board right now. Everything's in the red, selling off. But we started to see an early morning bounce back on crypto. Whether that will follow through, carry through, I don't know. I've got some doubts about that. Very often, very early morning price action is often reversed later on. So let's see. As I say, we expected this turn down. We're actually telling people we would not be buying at these levels. And actually the risk reward was quite good for a sell, bearing in mind we had this overhead resistance in place and the bearish divergence. So there was good risk reward for a sell on that. Same across a lot of the assets. So that's the S&P. Let's just take a little look at dollar index, because that took a big pump last night. The reason it took a pump, of course, is because the Fed was saying there's going to be fewer interest rate cuts next year. That means effectively interest rates will stay higher for longer. That means the dollar is more attractive to invest into because it's paying higher rates of interest. And so the dollar rallied very strongly on that news. And again, that was in expectation, because from this previous high, we've had an A, B, C down. We already had that labeled. And so we've moved up there. I think we're moving up in a final C wave, because I think that the dollar index is in actually a longish term correction, an ABC correction. I don't think it's going to be bounded by this 100% here. We already touched that, bounced back down, and then we just broke through slightly last night, although we've come back down again below. But we're somewhere near to really a peak in the dollar, I believe. I mean, obviously that, we've already broken above that 100%, so there's potential for it to go higher. But at the moment, it looks like an ABC correction of sorts, and so we could push lower. So we'll take a look about how this correlates with, for example, Bitcoin, and just see what the expectations are. Again, if we were to look back, in fact, I will just, we looked at the S&P. So this line, I put this on most of the charts. This is actually the 1 year ago. The show 1 year ago today is where this line was. So we had the dollar index a year ago today was about 102. We're currently 107.9, so 108 basically. So we're roughly 6%, somewhere around about 6% higher in the US dollar against the basket of currencies. So bear in mind, 6% higher in the dollar. So how is that translated across the board to, for example, the stock markets? Well, we've seen that already. It translated, so higher dollar, 6% higher, has equated to, let's just go back to the SPX, the S&P 500. Let's just put the measuring tool on to see the percentage increase in so from somewhere around about here to the all-time high on the S&P 500 there. So we can actually see 29% increase. This is during the show. Whilst we've been running this show, the S&P 500 has risen by 29 point something, about 30% increase. That was in line with our expectation of a rising market. All bets are off right now. As I say, I wouldn't want to buy at this with all these resistance levels overhead. But that's quite interesting. We saw a 6% rise in the dollar, but we've also seen a 30% rise in the SPX, S&P 500. Let's just take a little look at Bitcoin. Now, we did say again the other day, looking at short-term signals, we had potentially an ending diagonal here, 1, 2, 3, 4, 5 within trend lines. Is a pretty typical ending diagonal. And this is why I suspect we may still see some lower prices yet to come on Bitcoin. We saw a fairly sharp sell-off last night. We can see with this red candle, quite a deep sell-off down to 99,000 or something, just under 100,000 last night. We bounced back a little bit this morning, but again, I think that may be just a bit of a dead cat bounce at the moment. I think we've still got a little bit lower to go, probably, especially if this was ending diagonal. We certainly have lower to go on Bitcoin. And we're probably at that time, weren't we, when all of the sentiment was really high. The fear and greed index was really high, very much into extreme greed territory. And so when that's the case, you struggle to find new buyers because they're already all in. So the only opportunity is really to find sellers, and sellers have come in, and they just needed an excuse. And the excuse was the expectation on future interest rates is now that they'll stay higher for longer. And so that was the excuse to drive markets lower. So let's just have a look at where we've gone with Bitcoin in the past year. So I need to scroll out a bit because we're seeing quite a bit of gain in Bitcoin. So here's we were on the show 1 year ago. Bitcoin was 42,000. So just put the measuring tool on again to see percentage terms where we've gone from there. So from this point here, the all-time high was somewhere around here. So that is 158% increase. Whilst we've been running this show, we've seen 158% increase. So you basically, if you'd invested 100,000, you'd have 250,000 right now in Bitcoin. You know, if you'd actually invested from the beginning of the show. And the beginning of the show, again, remember, the dollar went higher. In fact, if we put the dollar on here, we would see the dollar went higher, lower, higher. That's exactly what Bitcoin has done. So actually we're seeing correlation with the dollar, which is somewhat unusual. Occasionally it happens. You have to watch for these correlations. And whilst the correlation is going on, if there's a positive correlation between assets, then it's well worth taking note of that. So at the moment, as I say, I think from this low point here, this was a corrective move, most definitely. All this overlap tells you it's corrective against the trend. So when the correction's finished, you know it's going to go higher. And we corrected down to about 49,000 here, and then pushed strongly higher. As I say, the show a year ago was let's see, where was the price? Okay, it was way back here, yeah, 42,000. So we've seen this correction downwards here, sideways. So then we expect another impulse to the upside. So that's what we've seen. So I think this is, if this is an ending diagonal, so we've had a wave 1 up, 2 down, 3 up, 4 down, and the 5 up, 3 up, 4 down, and the 5 up is ending diagonal. So let me just see if I put the fib measuring tool on. Let me just measure what I suspect may be the first wave here. Just move that on to second wave. Okay, that's really nice. I mean, I wasn't even expecting that. I'll just expand it out a bit so you can see a bit more. So what I'm doing, I'm measuring the first wave. So from the bottom of this little spike here. So I'm measuring after this correction, I'm measuring the final wave up here. What I want to see is the internal wave count. So I'll measure the first wave, which is somewhere around about there. I'll then just move it over, transpose it to the bottom of this wave here. That's round about it. It was about there. I mean, I think I expanded the previous one, but anyway, we're there or thereabouts. So wave 2, wave 1, wave 2, wave 3 was exactly 2.618 times wave 1. That's the perfect, a really nice, satisfying, perfect Fibonacci extension. 1.618 is the minimum, 2.618 is more common with crypto. It's exactly what we see here. Now, if that's correct, and then we got the pullback in a wave 4, so that'd be wave 3, pullback in wave 4 to what I've labeled here as 0, or the origin. And that's the origin of this final move up, 1, 2, 3, 4, 5 as an ending diagonal. That is quite satisfying. And if true, it tells me that there's probably quite a bit lower to come on Bitcoin. And as I say, when the euphoria is really high, there's probably good reason for that. And we've had this massive Trump pump. I think there is going to be some disappointment. There's going to be massive challenges ahead. And I don't know whether anybody, let alone Trump, is up to the challenges ahead that we have before us. Both economically, we've got some real headwinds in place. We looked yesterday at the interest rates, long-term interest rates. We saw they've been cutting rates. There is a danger that they're going to stifle growth and we're going to head into recession next year. This is challenging economically. Then on top of that, you've got all the geopolitical tensions and issues around the world. We've still got Russia, Ukraine bubbling away. We've still got the Middle East and Syria and so on. And there's others as well, other potential hotspots or flashpoints. So there's a lot of risks ahead, and the markets are still within touching distance highs. But yesterday was a potential turning point, with that commentary about fewer interest rate reductions in the future. So that's Bitcoin, as I say, potentially ending diagonal. That would be a 1, 2, 3, 4, 5 from this point here. So we could get quite a substantial correction, I believe, in the making. I'll just go through them one by one rather than jump around now. So we'll just look at Solana. Again, it was expected that we we're going to get further pullback, and we've mentioned it. And again, it's been kind of opposite to Bitcoin. We've got an ending diagonal Bitcoin going higher, but we've had Solana's been selling off for quite a while now. It has been corrective. So I still think we may still possibly get, after this correction, which may or may not be complete. I mean, we've had it move to just about 100% of this W wave down, transposed to the top of the X wave, and 100% just about took us to where we dipped to last night, which was $199 on Solana. So potentially this could be a corrective move, and we could push again to new all-time highs on Solana. It's not bad from a risk-reward perspective. I wouldn't mind dipping my toe in the water with a long for Solana, but again, we may just get a bit more of a push lower. It's hard to tell. So I'm not actually convinced enough to take any positions right now. You don't have to be trading all the time. It's almost Christmas. We're 6 days away from Christmas, so maybe take your foot off the pedal, take a break, and just see what happens over Christmas. So potentially, as I say, that looks corrective. If we just scroll out and see where we were a year ago, we can see that a year ago, Solana was at $72. Even now, we're at $210. So clearly, we're 3x from when we started the show precisely to the day 1 year ago. We're 3x up on Solana. I've always said Solana is a great asset, tends to move more than the others in either direction. Even though we've had this big pullback from 267 down to 210, we're still 3x above where we were a year ago. So it's been a great asset to hold. And who's to say where the future will be with Solana? It still looks a promising asset once this correction is complete. Ethereum's had a bit of a pullback again, like Bitcoin, like most of the assets actually. Interestingly, we actually had a potential local double top. It's not an actual total double top because the all-time high for Ethereum was 4,800, but just look at this level. I'll just put it in. This is quite significant. So the high we had there, the local high, I just put the dotted line in. The local high was actually made March this year. So what's that, 9 months ago or something, is it? 8, 9 months ago. And we just touched that twice, but we couldn't break through it. And these resistance levels, as I say, are really important. We saw it, and we've seen it over and over on different assets. We saw the 100% extension on the SPX, the S&P 500. That was an overhead resistance. We see clearly here overhead resistance again on Ethereum. So price would fail to break through it, and we pushed down. I suspect we may still have lower to go. This could just be 3 waves down, 3 waves up. But even if it's 3 waves down and we're in a 5-wave move to the upside, 1, 2, somehow 3, 4, even if we have a final push higher to go on Ethereum, which is entirely possible, it may be all the assets get a Christmas rally, who knows? As I say, I don't really care. I'm missing out. There's always opportunities within trading. Maybe time to take a break over Christmas. But there's a real possibility that we could see another final push. It could give us another local high on Ethereum, possibly. If we break through this level, which was 4,100, that's a key level. If we break through it, we could rocket a little bit higher, quite a bit higher on Ethereum. So I'll be watching that carefully, but I think there's also a big risk for downside. Risk reward wise, I would wait for close to this level. So both times it touched that level, that was a great time to sell with a stop loss just above, because that was an overhead resistance clearly in place. If we get up there again, once again, it's either a time to sell. You can actually do a sell with a stop loss just above. You can also do, if it goes above, you can then do a buy with a stop loss just below. That would mean whichever way the market goes, your loss is going to be small and modest and hopefully affordable, but the potential gain could be massive. So again, we've seen the gain there. I just put the percentage terms on so you can actually see it. So if I measure from where we were on the show a year ago to where we are now, we can see we're up 86%. So it's actually a fraction of most of the other assets. So Ethereum so far has been a disappointment, especially bearing in mind it has its own ETF now. But Ethereum is not quite the coin it used to be. Everything used to be built on Ethereum. It's not now. There are other better alternatives, perhaps. And it's not been majorly popular. As Bruce was saying yesterday, Ethereum is now proof of stake. And a lot of people prefer Bitcoin, which is proof of work, a mineable currency, which is immutable. It's decentralized. So that's why I think Bitcoin is the real store of value that people love. And Ethereum proof of stake is maybe not quite so attractive these days. So that's why we only got, I say only, but 86% gain whilst I've been running this show for the year. Still a tremendous gain. If you've been involved, it's great. But there's substantial risk. Bear in mind, we're now we've had the third test of this upside resistance. And so it's clearly a solid resistance overhead. So there's risk for downside. Gold has been one of our favorite subjects for the year. And gold has had a tremendous run. Let's just look, first of all, at what gains we made on gold for the past year. So this was the price, was basically about 2,000 a year ago. And we're currently 2,708. Well, the peak was 2,787. So that was actually a 37% gain. Now, where gold being digital gold, store of value, all that kind of thing, it's not one of the most volatile assets. Still, what a tremendous gain it's had. 37% it had over the year. Even now, it's still up probably around 30%, I think. Just measure where we're at today on it. So from when we started the show a year ago to where we are right now this moment, 29.6%. So yeah, for basically a foundation of an investment portfolio, maybe a cornerstone, maybe just a part of a well-diversified portfolio, whichever way you look at it, gold has been a good little addition to your portfolio. 30% in the year is just a tremendous gain, way above inflation. So great to have held gold and some of these assets, because the inflation beaters they've been this year. Maybe now is the time to start to lock in some of those gains, because 30%, and with some of the crypto assets, 150%, I think, for Bitcoin, you average them out and you're probably up somewhere around 100% in a reasonably well-diversified portfolio. You look at S&P as well, up 100%. Now, if you lock that in, that's actually enough gains for to tackle inflation for many years ahead and to give you some income. So I think hopefully people have had a really good year, and hopefully if people continue to follow our guidance on this show, they'll have a great year to come in 2025. One of the bright ones that's done better than most has been XRP, of course. It's one that we've said is difficult to predict. It's highly unpredictable. But, with the change in SEC chair since Trump came in. That's going to be inaugurated on the 20th, the new SEC chair. The XRP has gone up massively, and again, it's actually from 60 cents a year ago when we started the show, currently 240. So it's up 4x exactly today. It's been up higher than that previously, but 4x, 400% return on, and a lot of people held a lot of XRP and they hold it long term. I think it's probably a great place to take profit around these areas because, as we know, XRP can be highly volatile. Who knows? And if you've done 400%, wow, amazing, well done. So that's been one of the big gainers. Some of the smaller tokens have done even more in terms of gains. I mean, Jasmy is one that's been, we've been followed a little bit on this show. And again, let's just look at what we've done with Jasmy. So we talked about 4x there, didn't we, with XRP. So Jasmy, we're talking about 0.000582, I think, was a year ago when we started the show. The peak was 5.9 cents. So that's 913%, so 9x in 1 year. Even if you went to where we are today, it's no longer 9x because it's a volatile asset. Let's just see, sorry, where we are there. We started a year ago when the show started. Current price is here. So still up 5.3, 530%, so 5.3x still up on Jasmy. So yeah, some tremendous gains. If you've done 5x, yeah, I don't think you can complain at that. And then one of the more stable assets we'll just touch. It's interesting just to see where we've gone in the past year. BNB is a really good one. It's got a great revenue model. And again, I'll just look at what we've done there in the past year. So a year ago, it was 245, so it's done really, really well. So the peak, it had done 225%, so 2.25x. Right now, currently, it's 185% higher than a year ago when we started the show. So 185%, 1.85x. So BNB has been a great one to be involved with. So yeah, we've had a great year, Bruce and everybody. Let's see what the year ahead has. We'll be following all the news as it happens on a daily basis, and we'll continue with the show. I know that show's expanding. Well done, Bruce. It's been a great success. It's been a pleasure to be a part of it. Just finally, I'll just finish on one that I mentioned a few times, eBay token. As I say, it's not one for a major investment, but it's actually been quite interesting. Recently, for the past month, for example, it's done 1,665%. So more than 16x in the 1 month it's done. So it had a bit of a revival. The biggest investor of eBay actually has got more hands-on involved with eBay. And since that time, eBay's really taken off. So more than 16x in 1 month alone. And with all the talk that's going on, we're 6% up today alone, by the way. And 8.3% in 1 day ahead of Bitcoin. So yeah, it's got tremendous potential. If it gets back on track, then this 16x could actually pale into insignificance. It could be much, much higher than that. You can actually find it EVAI. It's the EV token. You can find it on CoinGecko. You can see that on the top here, coingecko.com. And there's actually the contract address is here. Actually, it says there contract info contract. That's the contract address. So if you were interested in buying the token, you can buy it on PancakeSwap. You can get the contract address here. And again, I wouldn't recommend putting a whole load of money into it, but it's actually an interesting punt because 16x in 1 month, it really could go crazy to the upside. There's real potential for it. So again, don't invest money you can't afford to lose, but it's an interesting punt. And a lot of these tokens started at cents and became dollars and became tens of dollars and hundreds of dollars and thousands of dollars. And for Bitcoin, hundreds of thousands of dollars or $100,000. So potential is there. This has got a great fundamental idea behind it about a rating system for cryptocurrency. So I think the future is potentially very, very bright, and I wouldn't bet against it. A brave man who bets against it. So that's where we'll finish today. Thanks so much for listening in. Look forward to catching up tomorrow, hopefully live tomorrow. So yeah, enjoy the show. Thanks for for allowing me to participate for the last year, Bruce. It's been a privilege. Thank you, everybody, and bye for now.
The great Matt Dixon with his Market Watch report. It has been a pleasure, brother. It really has. Matt and I have done a few things together, made a lot of money together as well. Let's look at our friends 2Bit here. If you haven't signed up for 2Bit, you should use the referral code Impact Money.
Hey, Randy, I got another home run for us, man. This 2Bit exchange is absolutely amazing.
Hey, Bruce, what's up, man? Yeah, why don't you tell me about that 2Bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want, that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID, and let's set you up with a trade copy system, and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you hook me up with the trade copy system. I can't wait. Sounds spectacular.
Hey, Matt. Hey, listen, I met with the guys at 2Bit Exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi, Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2Bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2Bit, TOOBIT. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're going to like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
I mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. It makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously, with all the years of experience that we can pack into it, and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey, David. Yeah, man, I'm excited about it too.
I definitely think it's a goer. 2Bit exchange. Make sure to check them out. Our feed today is not doing well on X, which is a bit annoying, but oh well, what are you going to do, right? As well here, let's see here. We did just looking for another one of my commercials here. Just a second. I thought we did one for Hong Kong, but I guess it's just me. Hong Kong. Join us in Hong Kong. Hong Kong is going to be fun. Yeah, we did one for Hong Kong. What is this? Why is it not coming up? Hong Kong consensus. I don't know why it's not showing. That's funny. Anyway, maybe I didn't play it on here. I just played it on the show. Anyway, we did a bunch of stuff for Consensus in Austin. Consensus Hong Kong is going to be really an important show. It's going to be February 18th through 20 in Hong Kong. We'll be there. It's going to be pretty awesome. I did put this together, Hong Kong. Maybe I didn't run the other one on. Maybe I just ran it on. Boom.
So you may have joined us at Consensus in Austin. It was absolutely fantastic. Big success. Everybody was there. Now Consensus turns their sights on Hong Kong. This will be the biggest gathering ever for Consensus in Asia. You should see the list of people that are speaking at the event. It's going to be absolutely fantastic. My brother David Porter and I will be there on location February 18 through 20, as well as Matt Dixon and the Impact Money show. Make sure to get your tickets today. If you buy them today or over the next couple of days before November 22nd, you get an added benefit. Use code Bruce15 to get a 15% discount. Do it today. Don't wait. We look forward to seeing you guys in Hong Kong. So you may have joined us
Look forward to
at
seeing you guys
Consensus.
in Hong Kong. This is going to be really cool. Hong Kong is far. It is really far, but hey man, hey there. You're going to be in Hong Kong? Hopefully we'll see you there. Make sure to reach out. Hong Kong. I can't wait. I'm a sucker for a place I haven't been. And I have not been to Hong Kong yet. Believe it or not. Hong Kong's been one of those elusive places. I've been supposed to go a number of times, kind of like Istanbul and as well India. Istanbul, of course, I've flown through that airport I don't know how many times, but I have never stopped in for a visit. But yeah, Hong Kong, I'm pretty excited about that. February 18 through 20. Use code Bruce15 for a 15% discount. You can just follow. I'll put the link on my X account, or you can even just go to I'll repost the post that I just did there. That has the link on it. Repost. And that is about it, guys. It's our 1 year anniversary show. Of course, we're coming out here on Christmas. I've been doing a Christmas carol with my youngest, Penelope. We have another sold out show. It's been a lot of fun. My oldest one, Bella, is also doing some stuff. She's helping out, but she's doing rehearsals for another play and super busy. It has been a heck of a year. I mean, from the political landscape to everything, it really has been a banner year, right? Really something else. I think 2025 is going to be super interesting and super successful. I wish everyone the best. Of course, we'll be back on tomorrow. But that is it for me today. Until next time, my friends, and we'll be back on your TVs at 9 a.m. and 12 noon. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.